Hello, this is Tim Dial with Nexa Mortgage again, and I wanted to spend just a few minutes. I wanted to wish everybody happy President's Day. I know the markets were closed today, so nothing really happening on that front. But I wanted to put together a short video about consolidating debt because one of the things that came out, as a matter of fact, the last morning update that came out was showing what is happening to credit card debt throughout the country, and it's causing the market it's causing consumers to slow their purchasing a great deal because once people get to the point where they're maxing out their credit cards, they just can't afford to spend anymore. So that's why the spending goes down. And so one of the ways out of that, if you are a consumer in that situation, is to consolidate your debt and get rid of that credit card debt. So I'm going to go into a little bit of detail on that here, and I'm going to go ahead and share a couple screens here real quick. And let's see, the first one shares here. So as you can see, this is the graphic that they put out on Friday that kind of shows what happened with the credit card debt over time. This was all the way back in 2011, back in here. And then you see it's going up, up, up in 2019 and 2020. And then it had this big dip right here. And this dip was caused by the COVID. This was during COVID, and we had all of that money that the government gave out. People were able to use a lot of that to pay down the credit card debt. And then after that, it started really shooting up and skyrocketing as the market opened back up and people really started spending. And as you can see here, it's very high at this point in January of 2025, highest it's ever been, as a matter of fact, nationally. So you may not be in that situation. You may not be in a situation where your credit card debt has gone way up, but most Americans are. They're feeling the crunch in a big way. And so that's why I wanted to get into this a little bit and cover it a little bit. I'm going to go ahead and share my other screen here as well. So let me get into the, actually, I'll just drag it over. And so anyway, refinancing your mortgage and paying off credit card debt could save you thousands of dollars. There's a lot of people out there who have a mortgage and have a low interest rate on their mortgage, maybe anywhere from 3% to 4.5%, something in that range, which is lower than today's mortgage rates. However, if you have credit card debt, you're paying a lot of times 20 to 29% interest on the credit cards. So if you have a lot of credit card debt and you just can't get your head above water on it, then a lot of people can save. We've had people who have refinanced and saved $1,000 a month in their, as far as their or more, $1,000 a month or more on their whole cash flow situation, because they don't have to pay those credit cards anymore, right? You just get them paid off and be done with them, and then try not to build them back up again. At least not very quickly. You want, once you get them paid off, then you want to get into a situation to where maybe you're paying them off every month or something like that. Especially now that we're starting to see some of the income catch up with some of the inflation. And if your income is rising, then maybe once the credit card debt's gone, then you don't have to use your credit cards to make ends meet anymore. But getting that paid off, we've had customers who have refinanced, and they've gone from like 3.5% on their mortgage to 6.5% on the new mortgage, but they still save $1,000 a month in cash flow because they got all that credit card debt paid off, or loans, whatever it is. We've even had some people put a car loan into it and get that paid off. You're paying, if you're paying $700-800 a month on a car loan, then that might be a way to go too. The other thing to keep in mind, most people will refinance their mortgage more than once. So, you use the refinance now, get the credit cards all paid off, and put you in a much better financial situation as far as your cash flow. And then over the next year or so, when the rates come back down, then you refinance again to lower that rate back to where, close to where you were before. And then you don't have the credit card debt, and your mortgage is lower as well. So those are the possibilities here. And a lot of people if you pay off credit cards, pay off your car, refinance your mortgage on your house, you end up with one payment on the house instead of all these payments. And that's how you're able to save over $1,000 a month in some cases. So I don't know what your situation is, but I did want to bring this up because it is a great tool to use for those people who have a lot of equity in their home and are not using that equity. Now, if you bought your house recently and you haven't been able to build up that equity, then it may not be the right fit, because usually you can only go up to about 80% of the value of the home as far as what that new cash out mortgage is going to look like. So just as an example, if you had, let's say you have a house that's worth 500,000 and let's say you owe like 300,000 on it, then 80% of 500,000 is 400,000. So you would have $100,000 left over in equity that you can use to pay stuff off. You may not need that much, obviously. A lot of people probably don't need 100,000, but I'm just giving you an example. Depending on what the value of the home is versus what you owe on it, you get the $300,000 mortgage paid off. Then you maybe take out a mortgage for $350,000, pay off $50,000 worth of debt, and then you end up with a $350,000 first mortgage, but only one payment, and you get rid of all that other stuff, Or maybe you do use the full. If you're paying off a car loan, maybe you do use the full 100,000, and you pay off car loan, credit cards, any other debt that you may have. Maybe you even have some student loans that you're paying on, and you want to just throw those in there too and just get rid of them. There's a lot you can do there if you have the equity to do it. So anyway, if you have any questions, certainly feel free to reach out to me. I'm here and available to answer any questions you might have. And also, one other thing to keep in mind is I do have people reach out every once in a while and ask about this situation and whether or not it would make sense to refinance, to do a cash out refinance to pay off debt. And I'm not going to steer you wrong on that. I never approach this as, wow, this is an opportunity to do a loan. For me, it's an opportunity to help somebody improve themselves. And if it's not going to truly improve their situation, then I'm not going to go down that road. I'm going to be open and upfront and tell you that it's not the right move. So anyway, that's pretty much it. If you have any questions, let me know. Here's my office phone number. My mobile phone is 615-995-2615, and my email address is tdial@nexamortgage.com. And I look forward to talking to you soon. Thanks. Bye.